Yo, what's up, family? What's up, friends? OG Larry checking in with the family on a Friday. Markets closed. Things are chilled out. If y'all saw the markets today, we were booming. Markets were at made all-time highs. QQQ's reaching for all-time highs, and I don't think it's over. But this video isn't about that. This video is geared towards new traders, new investors who want to be introduced to the market, who have no experience in the market, and what steps I would take if I were just getting in the market. Because if I knew 5 years ago what I know now, I'd probably be a very, very wealthy man. Be that as it may, some of the things I've learned along the way, I hope can help somebody else learn something as they begin their journey in the market. The first thing I would do, I would just learn as much as I could about the stock market so that I won't be intimidated by it. I would get into some reading or videos such as this one or other YouTube videos, and then I would try to learn as much as I can and get as familiar as I can with the language of the stock market so that when I'm listening and I am learning, I understand what I'm taking in, because it's a lot of nuances, it's a lot to learn, it's a lot to know, but the more you learn, the more time you have in the market, the better off you'll be, because it's not about time in the market, it's about putting time in the market. So if you're even thinking about learning how to invest, then the time to get in is now. 2026 has begun, and you should make it a part of your journey to start your portfolio and get into the stock market so that you can be on your way to future gains, future wealth, and financial independence. So becoming financially literate is a big deal. And you're hearing about it all the time now. You hear people talking about generational wealth. All you hear is generational wealth. These are people that know buying property and buying stocks is more important than buying Nikes or buying computers or buying very expensive phones, because we all have done it. Some of us still do it. But the thing is to learn about some of these companies that you're spending money with that you know, like, and love. And those are where you should start your investment journey. Companies like Nike that pay a dividend, places where you can put your money and your money compounds. Not like in a bank where you set your money and your money never grows and never does anything for you. You put your money into a stock, say for instance Nike, that pays a dividend. Not only is your money making money for you as the stock price goes up, but you can reinvest those dividends into the company, and then your money is making money. Not only your money is making money is making money plus interest, if you understand that. That's the way of the market, and you can't get that kind of deal anywhere else. So learning how to invest in the market is a very, very significant thing to do if you take that journey. And not only Nike that pays a dividend, you can still invest in companies that you know, like, and love, like Apple, like Meta, like Nvidia. Even if some of these companies that you haven't heard of, they're called Magnificent Seven stocks because they're stocks of great value, large market caps. They're not penny ante stocks. They're not stocks you're gambling on. So this is not what you want to do if you're looking for somewhere to gamble. This is what you want to do if you want to invest your money and have your money making money for you. It's always risk involved in the market, and nothing that I'm saying here is financial advice, but there's risk involved, because anytime you put your money anywhere, there's risk involved. And that's what a lot of people are scared of. And a lot of people panic if they buy some stock and the stock comes down. Then they panic rather than taking that as an opportunity to add to their position. So that's another thing. You have to understand that the companies that you know, like, and love that are strong, even if the market, say for instance, crashes and comes down 20%, great companies might move 1 or 2%, and your money is still relatively safe. And another thing that I would consider, probably even before investing in a large cap or a stock that I liked and love, you can get into an ETF or index fund, and an index fund, an ETF is an exchange traded fund, and an index fund is the same. These are funds that are compiled of several stocks, say for instance the SPY or the QQQ that is heavy on tech stocks, like say for instance Apple or Nvidia. They're heavily weighted in the SPY and then the Qs, and these stocks and these index funds average gain 10% a year on average. So even if a stock like Apple costs $240 something like it is today, you don't even have to have that much money to start investing in it. You can dollar cost average in. You can buy fractional shares, which is a piece of the apple. Have you ever heard of a piece of the pie? If you get a piece of apple, you've got a piece of the pie, and it doesn't matter if you can only invest $5 a week. Start somewhere, because the more you know, then the more you will grow, and the more your account will grow. You could take your portfolio from $100 to $1,000. And once you learn how to invest, you can ease into trading. You can get a demo account. You can download a demo account on your phone, Robinhood, or one of those type of brokerage accounts, Webull, Moo, Fidelity, Public. You got all these investing apps, even Cash App. You probably have that on your phone right now. You can invest in stocks through Cash App. But what you want to do is try to not listen to the stocks that you might hear everybody talking about. You want to do a little homework, do a little research before you invest in a stock, and understand what the company does, understand what price to earning is, understand that's the PE ratio, understand what that is, understand the not just the technicals, but the fundamentals of a company that help you know whether or not this company is a good company that invest in. If they made money in the past, if they made money year over year, month over month, quarter over quarter, then that's something to consider that might be a good investment. And you want to take these metrics and use them on every stock that you consider buying into. So I'm not going to make this long. I just wanted to reach out and encourage anybody that's a beginner trader, investor, young or old, then consider just jumping in there and doing it, and believing in yourself and your potential to learn this stuff, to understand this stuff, and to understand that your money can grow and work for you in the long run. And you'll be on your way to creating generational wealth for your family, for your friends, or for your kids, or whoever it is that you support. So just take the bull by the horns and get in there and learn how to make your money make money for you. Like that sign says behind me, money makes money. That's what we do around here, and for my intermediate investors, or even for my pros and traders in this land, I come here with not only educational material, but material for those that are already into getting money and know a good play when they see it, and know how to line it up with the charts and with the technicals. So not only can you get fundamental analysis over here, you can get technical analysis and education. And not only that, we could just build a community and a crew that works together and makes money together and just supports each other. So with that being said, I'm gonna get on out of here. Y'all have a good weekend, and take care.